Shri Om Birla is declared elected as the Speaker of this.
Good afternoon, ladies and gentlemen. Welcome to Market Today. This is the last 1.5 hour of market wheel that we addressing as far as prices are concerned. Remember, it's the monthly expiry of the Nifty today. The June has turned out to be a fantastic trading month as far as bulls are concerned. Let's just go over the Nifty 23,986, 119 points higher. Remember, it also briefly flirted with the record high above 24,000 points, but was soon met with selling pressure. So the day's low is 23,810. That was hit in the first 20-30 minutes of trade, and from then on we have a one-sided 200-point uptick that's come on the Nifty. Also giving strength to the Nifty is the IT index, today 715 points higher, an uptick of 2%, 36,127. Let's look at the pullers and draggers on the index today. Of course, Reliance, being the heaviest weighted stock on the index, is also at a record high, 3,065 for you, 1.24% higher. Of the Nifty's tally of 114 points in the green, about 25%, 31 points come from Reliance. Infosys and TCS are having a very strong outing on the Lal Street today, up about 1.8 and 1.7% respectively. And then the private bank at a record high, ICICI Bank, is contributing substantially. On the side of ICICI Bank stands Kotak, 1.5% higher. What's pulling the index down? SBI, Bajaj Finance and L&T in particular, but nothing to be worried about as such. What we'll do is we'll take a very quick detour into the market before we welcome our guest for today, who is Avinash Gorakshakar. Just give me a moment. There is absolutely no stopping block deals today. One of the biggest of them all, India Cements, was seen happening on the counter. Ultratech, the sector leader by a very wide margin, 152 million tons is its installed capacity, purchased a 23% stake in India Cements for about, let's see the value that is there on India Cements, about 2,000 crore rupees, and that was done before markets opened. So India Cement has a volume of about 3,389 crores. Extreme enthusiasm on this one, and of course there is absolutely no stopping defense counters is within their Mazgaon dock, 8% higher. Needless to say, this is a record high, 4,434. This is the top traded counter on the National Stock Exchange of today. Apart from that, a host of IT stocks apart from Infosys and TCS are also buzzing with gains. What we'll do, ladies and gentlemen, over the next 20 odd minutes, we'll discuss how markets are structured at this point of time at record high. And joining us on the show is Avinash Gorakshakar, Head of Research at Profit Mart Securities. Good afternoon to you, Avinash, and what a pleasure to host you on this kind of a record run on markets, record highs all around, and it's June that ends on a striking note as far as trade is concerned.
No, I think good afternoon, Shell. I think 24,000 was long awaited, and I think today was the lucky day. I think we did hit 24,000. My sense is that July is also going to be a very strong month. I think 22nd July is what I assume the budget is going to be presented, and I think now the run up for the budget will start. I think probably from the 10th or 12th of July. Another pre-budget rally can be expected. I think we have already now been hearing that fertilizers, agrochemicals, housing finance, typically defense, solar and renewable kind of sectors. These are the kind of sectors where a lot of expectations have been built by the market, and I think the run-up for the budget will start. So I think you're going to see a lot of stock-specific activity. Plus, the month of July is also going to coincide with the one, financial numbers, April to June. So I think all said net, the markets are definitely a good opportunity to look at, from a stock specific point of view. There have been some valuation catch-ups, there have been some valuation premiums now going forward. But I think, the market offers a lot of opportunity. And I think one has to be obviously a little choosy and be selective when one wants to build a portfolio. But yes, both the large caps and the mid caps appear to be quite solid and attractive. And I think once the budget is over, hopefully, everything comes as per expectations. You could see another run in the markets, which I feel is, definitely expected considering the kind of expectations now this first budget is going to come in from a coalition government. There could be some populist measures, but I think broadly, the market is expecting some good reforms to be announced in this budget.
Right. Avinash, the advanced decline ratio on the Lal Street at the moment is 1582 shares in the green, 782 in the red. So a very strong 2:1 favoring bulls. And when you talk about expectations, we've been observing the market on a regular basis, in fact, on a minute by minute basis. But when you sit back and think about it, this is a month when we've seen 21,000, we have seen 22,000, we have seen 23,000, and we've now seen 24,000 on the Nifty. So from a low of 21,231, ladies and gentlemen, we've scaled 24,000 in a span of about 13 trading sessions. That itself is a rally of about 14%. And if you look at it from the point of view of May 30th close, the previous expiry, when it was at 22,500, the journey is of about 1,500 points, and from then on, that's a percentage rise of about 6.5%. So if an index rises 6.5%, you can well imagine how individual components would have given returns. This makes, Avinash, your task even more difficult. You have such huge swings accompanied by very high volatility in a particular month. Now, for July, how do you think capital should be deployed ahead of the budget? What sectors, what stocks attract you even at these levels?
No, I think clearly, Shell, you made a very valid point that markets have risen very fast, and I think stocks have risen even faster. So now you need to be very selective. I think we have been telling our clients that look at large automotive companies like Mahindra and Mahindra, Tata Motors, typically auto component companies like Sundaram Fasteners, Uno Minda, or for that reason Bharat Forge. These are all quality plays, and I think you could obviously get some good news for the automotive sector, especially the electric vehicle sector. Another sector where we are very confident is on the corporate capex cycle. I think capital goods companies, despite the fact that they have run up, I think companies like Larsen and Toubro, Cummins, or for that reason even a Thermax, I think these are companies where a lot of capex is going to be announced by the government. Private sector capex is also building up. So capex could be another theme. The automotive sector could be another theme. Auto components could be another theme. And plus, housing and real estate. I think these are two pockets where you could expect a lot of announcements. Housing, already the government has announced 3 crore free houses under the PM Awas Yojana. And I think the housing sector could possibly expect some further boost up, in the coming budget. More importantly, real estate as a piece possibly could also get some good announcements. I think we've been seeing a lot of good residential as well as commercial activity building up. Most of the real estate builders, not only in North India, but even in cities like Bombay, they have been running very, very swiftly in terms of inventory sales. So I think these could be pockets of opportunity. And of course, the green energy and the renewable energy space, one can't ignore that. That is one area where I think you could see a lot of announcements, especially for companies like Irida, or for that reason, KP Green, or for that reason, typically companies which are into the solar panel business. Clearly, the government wants that the green energy focus will continue. So I think, we have been telling our clients that wherever you get an opportunity when the market corrects, these stocks and these kind of sectors should be part of their portfolio. So I think July will be a month where, these sectors will be in focus. Of course, there are many other sectors, but I think these would be the main sectors where I think the action could be coming. So, till that, I think we'll have to wait till the budget is announced.
Okay, let's look at the two stocks that Avinash has mentioned from the PSU basket. One related to financing of this 3 crore housing project that the government has announced within a day of taking charge in early June. This is HUDCO. The price action is right there in front of you. Early morning high was 294 rupees, and the counter is doing extremely well over the past 2 or 3 weeks or so. 280, bit of profit booking, but one of the finest stocks that have seen a very good run. In fact, if you look at how HUDCO's cost of financing, a drop in net non-performing assets, and of course a rise in net interest margins, that's the one that's driving a lot of momentum on HUDCO. And the other one is IREDA. This is the renewable energy space, and IREDA is the apex financing arm of the government. Early morning 204, and as of now at about 192, 193. So breakouts on both these counters in early trade. Avinash, are these levels that you prefer, or are you waiting for a much more juicier price point for your clients to enter?
Large player in the mass housing space, and I think looking at its balance sheet, looking at its return ratios, and the kind of patronage it gets from the government, I would not be surprised that once it crosses 290, 295, we could see levels of around 350 here again. So I think both these companies offer a good comfort to investors who want to enjoy the runway for a long period of time. And I think the party has just begun. So I think in both these sectors, housing finance as well as IREDA, which is into power finance, clearly I think the government's focus is very clear. They want to increase investments, and I think these are uniquely positioned companies where there's very little competition. So this makes the business even more remunerative and profitable over the next, say, 12 to 15 months.
Fair point. And while we are discussing HUDCO, let me just give you a view that has come in from Elara Capital. This is a very well-known research house operating out of Mumbai and London. It says that it's raising its target price on HUDCO to 350 rupees from 297, and it says that HUDCO may continue to demand scarcity premium, benefiting the most from government's thrust on housing/infra and its niche business model, which is aided by a high entry barrier, information asymmetry, distribution arbitrage, gives it a kick up as far as business is concerned, and therefore the target has been raised to 350 from 297. That's as far as HUDCO is concerned. Let's get into the market for a while and look at where prices are moving. Well, there is absolutely no stopping Ultratech Cement 2.7% higher, 11,440, and India Cement 8% higher, 283. Avinash, a series of well orchestrated mergers by two largest cement players, Ultratech today buying out India Cement, and the Ambuja universe led by the Adani Group also on the prowl. How do you see this event that's taken place today? Ultratech buying about 23% stake in India Cement.
I think, Shail, this is a very welcome move. I think it shows that a lot of consolidation is now going to happen. And I think this 23% acquisition is a big acquisition. Although, there have been some news reports which have come in media today saying that, the plant at India Cements is a little old, and therefore Ultratech would require to invest a lot, in fresh technology as well as fresh expansion here. But the most important thing is India Cement commands a very large capacity in South. That is going to be a good entry point for Ultratech to increase their market share. And most importantly, I think what the market would like to know at the end of the day today, that who is the seller? 23% stake is a large chunk, whether it is the management or whether it is RKD who has sold off some of his shares. I think that will be very important to note. So I think that would be interesting, because by the end of the day, the deals details would be out in the market. So only then I think the market would get a better sense as how the stock is going to perform in the next few days. And of course, what commentary comes from the Ultratech management. They have mentioned that it is just an investment, but I think it is more than an investment. And I think in the next 3 to 6 months, you could see a lot of noise coming in from the management on this acquisition.
Fair point. And we've often grappled with this idiom in the market as far as mergers and acquisitions is concerned. For a lay investor, sell the buyer and buy the seller, which essentially means that probably India Cement offers a better opportunity on the upside compared with Ultratech. But be that as it may, this is something which is completely news driven, and as Avinash points out, have the existing Srinivasan family sold, or is it one of the most well known investors on the Lal Street and into India Cement, Mr. R.K. Damani, being a partial seller? Only time will tell, and that time will come somewhere like 6 p.m. today. Avinash, your thoughts on this, rally in defense. Mazgaon up 8% today. Yesterday it was Garden Reach up 10%. Before that, Garden Reach up 10%. For 2 days it was Cochin Shipyard. I think amongst the 5-7 stocks in the public sector defense space, they've decided upon a calendar that 1 week मैं 10% बढ़ जाता हूँ, एक दिन अगले दिन तुम बढ़ जाना. It's that relay race that we have always seen in school, 4 into 100 meters, and each 100 meter is run by a new defense company. What do you think? What's happening?
I think Shell, you've given a good example of how defense stocks are playing to the tune in the markets. I think earlier it was Hindustan Aeronautics, when it got a large order for the Tejas aircrafts. Then it was Cochin Shipyard. Now it is Mazgaon Dock. Probably, there are other candidates like Bharat Dynamics, Bharat Electronics. Then, in fact, the biggest opportunity I think, this government is going to make a difference is in the defense space. I think people have underestimated the potential. Although, now stocks have risen to record high level, I would believe that, somebody who's got a 2 to 3 year kind of time frame, defense stocks are definitely going to continue to be the flavor of the market, because this is a space where the growth opportunity is extremely large. And I think, HAL, Hindustan Aeronautics, which has got that Tejas order, that RFQ, that order itself is about 45 to 50,000 crores. So, you could imagine what is the size of the market, Hindustan Aeronautics is now going to cover. So, my sense is, yes, expensive valuations, but I relate to the tune of the market to not be a buyer aggressively at these levels.
Yes, I think the best strategy would be if you are invested or lucky enough to be in any of these 4 or 5 stocks for an extended period of time, the one thing that you can do is at least not sell, or continuously raise your stop loss to about 5-7 percentage points below the current market price, and then probably just sell 10% and wait for 90% to really jump further up. Avinash, one more deal that was in the pipeline globally this time is news coming in from a global wire agency, Reuters, that Bosch, the German giant, will be bidding for Whirlpool, the American giant, for its consumer goods business. We are lucky to have both companies listed in India as well, and Whirlpool shot up 10% in trade today, doing about 150 points worth of gains. How do you see this transaction? Because we'll now have an open offer for Whirlpool if the global offer succeeds.
I think it's a very good opportunity, for Indian shareholders of Whirlpool to take a little bit of rub-off from the parent, that is Bosch. See, both Bosch and Whirlpool used to compete aggressively in the market for their products, and I believe, the combined market share for both these companies is roughly about 19-20% in the consumer durable space. And Bosch is aggressively looking at increasing its market share in this opportunity in this space in India. So I think clearly, if the global parent takes over Whirlpool's parent, then I think you're going to see a different parent coming in. I think more aggression coming in. Unfortunately, Whirlpool was not a very aggressive MNC player. If you look at all the consumer durable companies, Whirlpool had actually not delivered in the last 2 to 3 years, despite the fact that its balance sheet is good. It has got no debt on the books. It's got a good product portfolio. So I think going forward, this development is positive. That's the reason, the markets are happy. You're seeing that today Whirlpool stock is up by about 8-10%. And I think unless we get some more clarity on this global deal,
Yes.
I think the stock will continue to remain in the limelight.
Fair point. And till 6 months ago, it was the Whirlpool US parent that offloaded a substantial chunk of the Indian stock to domestic mutual funds under the valuation part, saying that it appeared to be too overvalued. And surprise, surprise, Whirlpool was at 1250 then. The all-time high for Whirlpool was 2700 rupees, and in a span of 6 months, all those fund managers who stuck their neck out have seen a 50% return on their investment by doing absolutely nothing. So luck favors the brave, and fortune, as far as markets are concerned, are made when you buy pain and probably wait for good turns to come in. Avinash, in the same breath, let's discuss the mid-cap and the small-cap space as well. Of course, the rally over the last 3 days and in the month of June has been dominated by large caps, but it's not exactly a quiet month for mid-caps. Fin Nifty is up 8%. The mid-cap and the small-cap indices are at record highs. What are you telling your clients? Where lies value and where lies froth?
No, I think, I think you've got to be again selective on the mid-cap side. As I said, we are very positive on the auto component side, and auto components, offer a very strong opportunity according to us. I think, stocks like Uno Minda, or for that reason, stocks like Bharat Forge, or typically, something like Sundaram Fasteners. Our sense is that, companies which operate in the commercial vehicle, in the tractor and the passenger car space are definitely going to get a better legroom for growth. If the electric vehicle opportunity is incentivized by the government in the coming budget, then there are many companies which operate, in this space also, specifically the battery companies, companies like Exide, companies like Amara Raja batteries. These are also opportunities where I think, now the commodity price problem is over. These companies have been investing heavily on the electric vehicle battery side. So I think, there are some pockets of opportunity where I think still investors can look at buying these stocks in a SIP form. Although valuations are not cheap, but I think growth is definitely going to be quite assured over the next 2 years. And I think, as I mentioned to you, like, in the cement pack with this acquisition of India Cement, smaller cement companies would be basically, obviously be in action. I think something like a Heidelberg Cement and Orient Cement, typically, companies which have got decent capacities would take over a target. So I think, one should be a little clever in looking at these companies, because the moment upon offer or maybe an announcement comes in, you could see a big spurt in these stock prices. So I think, Orient Cement looks pretty attractive. Even a Heidelberg Cement looks good. Typically, smaller companies like Sagar Cement, one could even look at such companies, because obviously now to build capacity from scratch is going to take a long time. So inorganic acquisitions are going to be more and more frequent. So that would be a more better opportunity, to look at smaller and mid-cap sizes in this sector.
Fair point, and a very well explained logic for especially Heidelberg and Orient. All these companies are facing a bone crushing, how should I say, competition from Ultratech and Ambuja Cement. Only national players are able to eke out some margins in this commoditized space, despite very strong demand coming from housing and infra. And people are now also open to acquisitions or strategic partnerships. Orient Cement, Heidelberg, although they look very good on the charts, but if you look at how long-term wealth has been created, well, they've been fallen short compared with this very, very sharp rally that you've seen across the board in the mid and the small cap space. So very well explained, Avinash, my compliments to you. The other space is telecom. Fabulous, how should I say, spectrum auction that happened just in 2 days, and very muted competition. Let me just put it as diplomatically as I can, between the three players, Vodafone Idea Vodafone, Bharti, and of course Reliance Industries. Vodafone has been a surprise package, bidding about 4,000 crores worth of spectrum. How do you see this stock now? And of course, your view on Bharti.
No, I think, Shell, we are positive on Bharti Airtel because we believe that, Bharti has not only been increasing its ARPUs, it's been increasing its customer base, and most importantly, it continues to be, very profitable. So I think in the telecom business now going forward, if one has to actually understand how the 5G growth opportunity is going to be capitalized, you have to understand how healthy the company's balance sheet is. So I think, it requires a lot of money, it requires a lot of capital because these are all asset intensive industries. On the other hand, Vodafone, which made a follow-on public offer of 18,000 crores, clearly they have, of course, invested, 3.5 to 4,000 crores in the 5G spectrum. But how sustainable is their ARPU growth? How sustainable is their customer addition? Because for the last 3 to 4 months, Shell, we have been hearing that they have been losing customers. And every quarter, if this company makes 3.5 thousand crores of loss, I think it's going to be a more tougher game going forward. It's not going to be easy for Vodafone. So I think, markets will definitely like to see finally the numbers, the cash flow, and obviously the profitability coming back. Unless that happens, they are looking at another preferential issue. So I think that is going to further increase the capital base. So I would be more positive on Bharti Airtel. Vodafone is more of a trading stock. I would not comment on it on fundamental grounds. But Bharti Airtel can definitely be accumulated if one has a 12 to 15 month kind of time.
Fair point. And what of the major block deal that happened last week on Industars? It points to the liquidity and the maturity of Indian markets that Indus Towers sailed through without as much as a blink in price, considering that 18,000 crores something was sold by the existing parent Vodafone PLC, and of course a lot of people latched onto that transaction apart from the broader markets. Indus Towers for you, is this something that looks interesting?
Yeah, in fact, Shell, it is one of these interesting businesses, where they own the asset, the tower asset, in a significant way. And I think the biggest opportunity for Indus Towers is basically the 5G growth opportunity because, as the 5G network grows, you would obviously require a lot of towers, a lot of new tenancy clients could come in for the company. And if you see the last 3-4 quarters, Shell, I think numbers have been excellent. This company was always undervalued and was ignored by the markets. But I think once the numbers came out and the growth opportunity was visible, I think people have understood that over the next 1 or 2 years, this represents a very solid opportunity for investors.
Right. That's how the market is at this point of time. Thank you, Avinash, for this wonderful exposition on where value lies and where we have froth and what must be done as far as large caps, mid caps and small caps are concerned. Thank you so much for your time. As always, we look forward to welcoming you again. We also have Sakshi with us now. Nifty 23,945 hit a golden number 24,000 just fairly recently. A blowout happening on the Nifty IT index, and all seems to be well in the world of stock markets as far as the last street is concerned on this last day of June's magnificent and spectacular FNO expiry. Sakshi.
Absolutely, Shell. What a wonderful fourth day of a run-up in the markets. 24,000 on the Nifty, 79,000 on the Sensex, the Nifty Bank hitting 53,000 mark. All the three benchmarks are roaring in trade, and of course, the participation of the large caps, the heavyweight counters, is cheered the most within this kind of a rally. Reliance Industries, HDFC Bank, ICICI Bank, those that have been big underperformers are now finally participating in this new phase of a run-up that we are seeing in the markets. Is definitely something to cheer about as well. And of course, there is this entire buzz within the cement pack that we are continuously really looking at that has led this entire fresh move within the markets today. We'll be awaiting our guests to join in. We'll have, I think, Kush Bora also joining in very soon. founder of kushbora.com. And we'll also have Asim, our colleague, to share with us, like I was pointing out, large caps doing very well. Reliance Industries is definitely the stock that we've been discussing all from yesterday and day before, and today again. It's the second day in a row when it has hit a record high. Take it away, Asim. What next for Reliance Industries?
Yeah, thanks, Sakshi. So it's for the second straight session, the stock has hit a record high, and it has joined the party on the last seat, with SDFC Bank and Airtel in the last two sessions contributing to the rally. So the rally in the telecom stocks coincides with the 5G spectrum, in which RIL's unlisted arm Jio also participated. Some analysts have attributed the rally in the telecom stocks to the tariff hike in the near term, which they said is imminent after Lok Sabha polls. This brings to focus RIL, which has risen 38% from its October 2023 low. The stock has broken out from its consolidation zone and looks set for new highs, some analysts have said. So, Kushal Gandhi from Stockbox said the stock displayed a bullish breakout after breaking above the sideways channel and formed over 75 trading sessions. The target price for RL is 3339, and he said a protective stop loss can be maintained at rupees 2889. JP Morgan has an overweight stance on RL stock, and they have raised their target price to rupees 3320. They said the expectations of a tariff increase have been supportive for the telecom sector. Mandar Bhujane, who is an equity research analyst at Choice Broking, said if the stock manages to close above rupees 3030 level, it may reach rupees 3330. Immediate support levels are located at rupees 2950. He also said it's advisable to set a stop loss at rupees 2870. Back to you, Sakshi.
Okay, thanks a lot then, Asim, for all that update. Let's also welcome Kush Bora now is with us. Kush, good afternoon. Great to have you with us. Well, a spectacular day. We've seen 24,000 with us. What are you really looking at this skyrocketing market? Is it giving you enough and more opportunities to dip in, or are you waiting for a dip now?
Hi, first of all, very good afternoon to you. We've all been waiting for a dip, but then market doesn't really oblige, right? Except for maybe a 50-100 point cut here or there, right? Uh, while there is a reason to cheer at 24,000, I think this is also a cause for caution. And the only reason I say this is because, the money waiting on the sidelines is perhaps not getting a chance to enter, which is perhaps a good thing. But also, if you see the FIIs, they have gone on and created record long positions on the index. If you see the FNO positions. Now, historically, when these levels have been reached, the markets have seen topping out formations. So this is actually perhaps, a good time for the markets to pull back, correct a little. But then again, you and I can wish, but, it's up to the markets to oblige or not. Right now, they don't seem to be in any mood. Bank Nifty is a different beast altogether. It's woken up, from its slumber, largely thanks to the private banks party, and, with the FII inflow starting to trickle in, this rally perhaps might continue for some time. I was listening to you speak about Reliance for, sometime just a while ago. As long as Reliance Industries and HDFC Bank, just these two stocks, hold ground, we may not see a big correction in the Nifty. The only thing that happens is that the risk reward ratios don't become extremely exciting for any fresh long positions on Nifty, or in fact, perhaps even either on Bank Nifty from here on. So a buy on dips is a good strategy. At the moment, a 100-point dip is perhaps the best that you can ask for, but I'll be a little wary, at these levels.
Okay, got that. So what are the key stocks that you'd look at today? Again, there is a lot of momentum in cement space. The railway space stocks are buzzing. Shipping stocks are back in action again. PSUs are doing well overall. Large caps, like you already pointed out, banking space and otherwise heavyweights are participating. So we are spoiled for choice clearly. But where do you think is value lying? Where should one be really picking up some stocks?
You're right there, but the stock-specific action is quite encouraging. Just to add to what I mentioned about Nifty and Bank Nifty, if you see the broader indices, they haven't really participated, with all the gusto. So perhaps the time for large caps has come after, a 2, 3, perhaps even a 4-year high test. So that is a theme that you could see playing out going forward. Now you mentioned cement stocks, some of the PSU names. We've got some of these on our radar as well. Just to begin with, Grasim is one stock that we have on our radar. We've been tracking for a while. This stock has had a stellar run. If you see any kind of dip that's come about, even around its 50-day moving averages have been bought into. At the moment, on the back of very strong volumes, the stock is moving higher. In fact, even for the next series, the July series, the open interest buildup for Grasim is very encouraging. So I think 2700, 2775 are good levels to look at for Grasim. 2550 is a good support zone. From the cash segment, there's a stock called CMS Info Systems. This stock too has had a good run. Has its share of volatility, does dip to the 20-day moving average and rebounds from there. We are seeing a very similar pattern this time around as well. Just from a near term, I think of 500, which was the near term high for the stock, should be a level to watch for once that is taken out of 525. And for this one, the support zone comes in at 475. So CMS Info System, Grasim, some of these names that we've got on our radar. So stock specific action is a plenty.
Okay, ladies and gentlemen, 2:37. What we'll do is we'll just take a small detour into the market. I'd just like to see the action in the IT space. Sakshi, needless to say, at 1.5%, the Nifty IT is the top performing index for today. And we've had a very, very strong breakout coming into stocks such as Infosys, stocks such as Persistent, up 1.9%. And a very sharp uptick in the open interest as well. Let's get this conversation going in terms of rollovers, and I'll request Kush if he can comment on the strength of rollovers in the IT space. Kush, would you do that?
So, interestingly, we've been a little cautious on IT for a while now. We continue to remain a little cautious. And also one more thing to add here, typically what we see during the expiry time is, a trend reversal kind of a trade, which means, if the stocks have seen any kind of, shorting or consolidation, then perhaps, an uptick is inevitable. Now, I don't think the comparison with the US IT stocks, is warranted. Very different spaces, and even there only a handful of stocks are doing well. So I don't think that's a good benchmark for us to follow. On the whole, the near-term trend for these stocks, for sure has turned a corner. But even when we look at some of these names, we are a little cautious. So HCL and TCS haven't really moved up as much. Infosys, as you pointed out, has turned the corner. Wipro seems to be moving above that 500 resistance zone. So these are the two stocks that we've got on our radar, and we've always liked Persistent Systems, or rather liked it for some time now. Quite heartening to see the recovery. So if we were to play some of these names, we would have a cautiously optimistic outlook. Near-term trend definitely positive. So we'd play them, but maybe a tighter risk management in place.
Fair point. And Sakshi, let's look at the winners as far as the rollover theme is concerned. Remember, tomorrow we start July 1st. We start the July FNO's expiry on June 28th. And tomorrow also happens to be the last trading day of the month, of the quarter, as also of the first half calendar year. So it will be an interesting day when mutual funds will use the last juice of every single SIP that has come in to further boost their net asset values, and then stand better in the rankings tables. So okay, what's looking good as far as rollovers are concerned? I'm looking at the banking space, and I see a very good one coming into Federal Bank. Remember, Federal Bank is also at a record high. This one rose about 10% in the month of June and has shown spectacular rollovers at about 72% of long-term average. Kush, of course, HDFC Bank, ICICI and Axis were the star within the Nifty, but it was the small old world private sector banks that took away breath of a lot of investors and traders. Ones like Federal Bank, Catalan Syrian Bank, City Union Bank. Would you have a favorite in this under-owned and underappreciated space?
Well, a couple of names do stand out. City Union Bank, we've been tracking, and the stock's actually shown a stellar run in the last 2 to 3 weeks time, but is now perhaps coming across and hitting some resistance zones. So we'd be watching this one very closely. I think above 170 is when this will start to look even more attractive. So definitely one stock to have on your radar. This is the City Union Bank that we're talking about. About 167 is the current rate. So above 170 is when this will start to look attractive. Federal Bank, on the other hand, I think you were speaking about that also a while ago. Stellar run, you've seen a bit of volatility in there, but the general trend for this one is on the rise. So this is the more favored one. It's also got the momentum going for it. So I'll have Federal Bank, rated higher than City Union Bank purely on the basis of the momentum and the trend that we've witnessed. Now, for Federal Bank, positionally, you could look at a 190 and a 210, as the immediate levels that it could rise to. And on the downside, 167 is the support zone. Let me round it off to 165. So even for a fresh entry, the risk reward ratio seems favorable. So Federal Bank, as I said, based on the momentum and the trend, and City Union Bank perhaps above a 170 kind of 180. I beg your pardon. Above a 180, 170 kind of a mark will start to look attractive.
Okay, got that. Well, Kush, we'll also draw your attention to some other pockets that are buzzing. So within the power and the power financier space, how are you really looking at some of the opportunities? REC, PFC, IREDA, there's a lot of buzz again happening in this outperforming space of the past. Anything that you like within this space? Kush, were you able to hear me? Okay, I think there is some kind of a technical issue. We'll try and connect back with Kush. But again, power space is something that garners all the attention. Remember, in the morning, there was several of brokerage houses reports as well as news flows regarding SJVN and many power related companies also getting continuous orders, and this will be one space that will be important to track even from the budget perspective as to how the government really moves forward with the reforms in this space. And this is okay. Kush is back with us. Kush, power space and the power financing space, are you looking at that space interestingly?
First up, an apology. It's quite an irony when the auctions are done and we're facing network issues on
yes.
the Geo network. So, so my sincere apologies for that. Even with the choppy network, let me answer this question. CESC is one stock that we have on our radar. The stock actually had quite a run yesterday, but we think there is some more up move left. Hasn't really we've seen in the power sector. So on the upside, 195 is a level to look at. Also, we are looking at Tata Power and Torrent Power as some of these names. So we'll probably be focusing more on these. The power financiers, although have run up quite a bit, at the moment seem to be consolidating. So we'll be a little watchful on those. So CESC, Tata Power, and radar. From an alternate energy space, perhaps a Triveni turbine also.
Okay, let's talk about the other outperforming space. I'll speak to you about the defense and the shipping space as well now. Mazagon Dock, there is another very smart move being seen again in trade, and after the company got the Navratna status, and we're also looking at buzz continuing on GRSE, GE Shipping, some such stocks too. How are you really looking at this space? Does it still offer a lot of opportunity, or is the best of the rally behind us within the shipping space? Okay, I guess there is some network issue that Kush is facing in, but we can clearly see that Mazagon Dock in fact had a very good number that Shell, I'm sure you would have taken note of, 4444. That is what we had seen on Mazagon today, a very interesting number. So that happened, and of course the entire space is now abuzz with action. Yes, you can see now 4404 is back. Let's see if 4444 also comes back, but we did see that at the high point of the day. But shipping space is clearly something that we are watching out for, especially because the budget may have some good news. Yes, Shell.
Sakshi, remember our last conversation yesterday at 3:30 p.m. was which defense stock would hit 10% tomorrow, and at least I had put my neck out on BDL, but BDL said नहीं भाई इस हफ्ते तो माजगांव डॉग को ही रहने दो, और न्यूज़ भी है और मौका भी है और दस्तूर भी है. So it was Mazgaon's turn today. Remember on Wednesday and Tuesday it was Garden Reach that hit 10% successively. So now it's that musical chairs which we used to play in school, remember. Slowly you keep going around a chair, and then one of us gets that chair, and that's how it is. Mazgaon up about 10% in early deals, and now of course Sakshi's magic number 44 should be on screen. Very smart rallies happening here. Kush, irony of ironies, could you hear us on this Spectrum auction day? Are we audible to you?
You are. As I said, apologies for the choppy network, but right now the connection seems to be holding up.
No issues. Yes, okay. Now your favorite defense stock. You can also have two favorites. You can also have three favorites.
Well, most of them will fall under your favorite category one way or another. I mean, pick any, and they've given multi-bagger returns over the last couple of years, right? And there was a time when multi-baggers would take generations to come about. We live in that overheated. A lot of them are either seeing some sort of profit booking, or perhaps are due for one. So while Mazgaon Dog, GRSE have had a stellar run, are doing well on the weekly time frames, both have gone into overheated territories. So I will wait for a dip on all these names. I'll be happy to see a 5, perhaps even a 10% kind of a cut on these before I enter. You are incidentally seeing some of that cut, in the likes of, let's say, a BDL or a BEL. It's not a deep one, but at least they're consolidating, which is a healthy sign. So I'll wait for some of these names to dip a little and then enter.
Fair point, and we wish you the best in terms of waiting for a 10% cut. You have all our best wishes for that to happen. Will that happen? Only time will tell. But so far there is absolutely no let up from the bulls as far as Mazgaon, Garden Reach, Cochin Shipyard are concerned. Sakshi, we are back above 24,000, and there was a bit of a sell-off that happened till 23,920. But surprise, the weighted value added price of Nifty helped for the bounce back that you've seen over the last 15 minutes. So we are now at 248. I think a very sharp rally is in the offing, and we should pray for the Nifty to close above 24,000 for this expiry. Sakshi, what are you watching?
Absolutely, Shell, and this is what our hopes are lying, because then only we can come out with another magic number and can say, abki baar 25,000 if it closes about 24,000, because that's when we will be looking at a quarter of a century for the Nifty also. And of course, today is the India semi-final, and we are keeping all our hopes on India to be reaching the finals to battle South Africa this time around. So let's hope that the markets and the blue boys of the markets also continue to show us that strength and help the Nifty close above that 24,000 mark too. But it's the IT space clearly that's getting in all the limelight. 1.7% higher. Finally, it's actually showing a lot of strength. LTI, Mindtree is 3.7% higher. Wipro, persistent as was already highlighted by Kush. Infosys, TCS, Coforge, you name it. So broader markets, Nifty, all of them, they're actually moving up sharply when it comes to the IT names as well. A few days ago, we were looking at the record low in the rupee, probably aiding the sentiment within the IT pack. And then there was some kind of a dip after that. Accenture's lowering the guidance, but now within about a week or 10 days or so, we'll be looking at the earnings again. Kush, IT, for you with respect to earnings, where would you be keeping your bets on? Would it be with the large caps or the broader market mid-cap names that will continue to outperform?
Well, we'll be looking at the broader market names. Persistent is the one that we've already mentioned. along with that, a Bsoft and a Coforge also, make our list. So these are some of the names, that we have on our radar. We have a feeling that, some of these names might perhaps consolidate going forward at the large cap ones. I mean, might consolidate going forward before we see any kind of a big up move. So all eyes on the mid cap and the broader marketplace.
Okay, got that. So fresh highs, viewers, for the Nifty and for the Sensex as well. Stunning move across the board. Beat the IT names, even infra and oil and gas are participating sharply. Private banks, financials, we already have kept note of. Metal space is doing well. Pharma space is something that I wanted to discuss with you, Kush. Is there enough and more confidence within the pharma space? There are few stocks that are pulling up, but there is no directional move that entire sector seems to be taking right here, which is the case in other parts of the market. The entire sector seems to be moving, but that's not happening with pharma. It's Dr. Reddy's today, it was Sun Pharma the other day, it was Divis Laboratories before that. So, how are you looking at the entire pharma space, and is this a space to be in or completely avoid right now?
Well, this is actually the true nature of the pharma space anyway, right? I mean, a lot of these names have a varied business proposition, have a varied business setup, and that's the way you see it play out. A lot of times, that's what happens. Pharma names get we tend to sort of paint them with the same brush and then expect all of them to move. I think it should be a big healthcare basket that should be looked at. So from that perspective, if you look at it, I think there is a lot of room and a lot of areas which are perhaps showing some value. Dr. Reddy's, as you rightly mentioned, after a brief round of consolidation, has started to move up. We are also looking at some of the hospital names. Now there was a big crack that had come about. After that, a lot of these names are consolidating, and the bias is starting to turn mildly positive. So if you look at perhaps like a Rainbow Children, in the near term there is pressure, but I think these stocks will perhaps turn a corner around. So look at them very specifically. At the moment, we have, as I said, Dr. Reddy's and Rainbow Children's, on our radar that we're tracking closely.
Fair point. Sakshi, let's dig a little deeper into the broader markets. So far on the Nifty, the advanced decline is really fairly good, 3:2, 31 versus 19. That's not so in the broader market. We have a profit booking assailing us. Just 729 shares in the green on the National Stock Exchange compared with 1524. And shortly I'll also point out a similar statistic on FNO. What we see on FNO is a move led only by the Nifty, and you have 111 stock futures which are down compared with 75 that are in the green. Of course, there is absolute a carpet of green on IT stocks and a carpet of green on cement stocks, but there is a mild profit booking happening across the board. And why shouldn't it be? June's FNO's expiry has been one of the best. And of course, let's look at the Nifty now. The last 20 minutes have been superb. A low of 23,930, which was the VWAP price of the Nifty. And from then on, 24,027. The Nifty is negotiating the second resistance of the day. Let's see what happens. And of course, everybody's moving. TCS 39.31, 1.95% higher. A smart move coming into NTPC, 2.24% higher. ICICI Bank, Axis, Reliance, we've discussed ad nauseum. This is moving very well. And Sakshi, notice that in this month, from the low of June 4th, we've seen 21,000, we've seen 22,000, we've seen 23,000, and we've seen 24,000 in a span of less than, 14 trading sessions. It's a rare month. I can't remember, 1,000 levels being crossed in a single month. And that's volatility, ladies and gentlemen. It's also strength that lower levels have been purchased into, and it's also an indication of how this bull market is structuring itself in possibly the most volatile and the most important month that 2024 could throw off? Kush.
Well, you're right. My only concern being that we perhaps run up a little too much for comfort. There are bull runs and there are bull runs, right? Where when the markets hit highs, there is a feeling of euphoria. I am not entirely sure if everyone's feeling that. I'm sure a couple of other guests also who would have come around, would have had similar caution or similar thought. So this time around, we're not feeling that euphoria. Perhaps could be because the way the broader markets are performing. Perhaps because the Nifty's had a one-way run post the 4th of June. A kind of fall debacle that we saw. But that's what it is, right? I mean, trend is your friend. You have to respect it and play the trend. Although at these levels, I will perhaps have my position sizing a little cut down. I will stick with the long side of the market, but perhaps, as I said, on a lighter position.
Okay, got that. Kush, we'll again look at some of the other pockets where we can look from you. Where exactly can one be looking at? What about the auto space? Is that a space that interests you? Enough and more action has been seen on stocks like M&M just before, and we've also seen stocks like Ashok Leyland come out of slumber. We've seen auto ancillaries taking a turn to come back, especially the bearing makers, stocks like SKF, Timken, NRB bearings. Many of those stocks have actually been seeing a sharp rally. Samvardhan Motherson has been, of course, talk of the town, been a talk of the town. We've also talked about Electra and JBM Auto as and when the EV fever is rising. The entire EV space and the entire auto ancillary pack. How are you approaching?
Very positively. In fact, just this morning, we were asked about our view on the auto pack, and we said that the dip that was there in Maruti and even M&M, early on in the day, is perhaps on account of the rollover activity that we are seeing. If you see, Mahindra and Mahindra has actually shown a very smart rebound from the 20-day moving average, like it has, for the most part of this year. It's actually turned in the green, so we remain constructive. It's a good sign that some of these stocks are seeing a bit of a profit taking, makes it a healthy entry point, for some of these names. Maruti's been languishing, and when I say languishing, it is in more of a relative term where the likes of Tata Motors, Mahindra have done well. Even Ashok Leyland has started to play that catch-up game. But we think that the 12,000 mark, where the stock is consolidating, perhaps a little lower, 11,800 also, is a good support zone. I think this stock is due for a run towards, let's say, 12,600, perhaps even a 13,000 as well. So we're very constructive on these. We like some of the names that you mentioned in terms of Samvardhana, although it's a little overbought at the moment. JBM Auto as well. One of the picks that we have from the ancillary space is Lumax Auto Tech. Stellar run. Even yesterday, if you see, the stock had a good run on the back of good volumes. We feel that a lot of upside is still left on this one. 625, 650 are the levels to watch for on the upside. On the downside, keep a stop loss at 555. So on the whole, very constructive on this space. Any kind of a meaningful dip towards the averages, towards the moving averages, should actually be taken as a buying opportunity in select names.
Okay, got that. So that's the auto space for you and the view on the entire pack. How about the other commuting space, railways? Is that also an interesting part for you? Today, it's Titagarh Rail that's back in action. A lot of buying happening on that one. Texmaco Rail, JWL. We've been talking about these names ad nauseum, but where do you think there is still enough opportunity?
I'll pick the word that you said. Interesting for sure. But what do we do about these from here on, right? I don't think you are going to make such multi-bagger returns that you did in the last 2-3 years, right? So while they remain attractive and it's a space that you can't deny and can't stay out of, you still have to take it with a pinch of salt. We do like Titagarh Railwagon. We do like JWL in particular. We've had a long, view on this from a much lower level. So that remains. But this will now be a part of the portfolio that we've already got. Perhaps a fresh addition. Like I was mentioned, like I was just a while back. If we get that 10% dip, if and when, then perhaps it makes it a little more interesting. But other than that, I will continue to hold what I have, buy only on dips.
Right. Exactly 3 p.m. Kush, thank you so much for this lovely discussion on where markets are headed and where to find value. We'll keep an eye out on Lumax Auto Technologies. Of course, the counter is at a record high, but what part of the market isn't at a fresh peak? Thank you so much for your time. And with the same breath, we'll be welcoming our dear friend, Mr. Sharad Avasthi from the eastern part of the country, Kolkata, for a very nice half an hour chat on this last day of the FNO expiry, 24,000 on the Nifty and 52,840 on the Bank Nifty. Sharaji, good afternoon. A very warm welcome to you. You're very good at hiding your happiness when markets hit a record high, primarily because you are a value investor, and finding value at 24,000 and 53,000 in the Bank Nifty is a very, very difficult task. Welcome to market today, and how have you been?
Yeah, thank you, Shalji. Good afternoon. I think the rally has been very supportive, barring the election major reaction. I think most of it has been a one-way rally kind of situation. And finding value is a bit more difficult than it was, say, maybe 6 months or 1 year ago. But I think now you have to get into ideas where you take a bit of risk in terms of, the deliverables that the companies can put in over the next 1.5, 2 years. And it could be capex oriented risk or any kind of event oriented risk within those stocks. And the other thing you can do is stretch your horizon to beyond 2 years to get into ideas that could perform or outperform the broader market substantially, either because of sectoral tailwinds or individual company tailwinds. So that is the way we have been designing our investment approach to get into stocks where we have either very good long-term tailwinds for the sector, and the company has a good presence within that space. In addition, if there is a company which is taking on a big capex, maybe it gets delayed, by 3 to 6 months. That's okay, or it may have been delayed by 3 to 6 months. But I think wherever we have faith in the management and that the companies can do well over a period of time, I think those are the themes we are working with largely.
Fair point. Sharaji, if you could share a couple of names which are possibly on your radar. You may not be sort of nibbling into them, but waiting for better prices.
These are 2-3 names which I'm already looking at, not maybe waiting for further dips. One would be a chemical company again, Avinash Industries. Recently, they had some issues regarding the fire at one of their plants. But when I look at the product profile, I think the products are futuristic in the way they can, work on reducing carbon emissions as well as enhancing performance. So I think it's a twin advantage for those products internationally as well as nationally. They have a lot of products internationally also, around 40-45% is exports. They are doing a decent amount of capex also, most probably trebling the capacities, etc. And the fire issue is behind us. It was a major fire, but now more or less normal operations have begun, so that would also start to contribute. So the capex starts to contribute, new product launches start to contribute. Historical valuation wise, maybe it will not look that good, but I think the forward numbers can look very exciting for this company. 3-4 products are on the anvil. For initial targets, we are targeting somewhere around 35-40 kind of multiples on the numbers. So the first targets we are working with is around 1200. The other 2 ideas, one is IQ Lighting, which has again done a huge amount of capex, recent issue. And I think as one of the plants has been recently commissioned, and the EMS space should be very attractive. So I think growth would be very good. Once the capex starts rolling in again, it's a substantial capex, so the number improvement would be very substantial there. And one multi-bagger idea, I think Idea Forge, the drone deep tech company. I think that's a very good story we are looking at. The drone industry itself, could be multi-bagger kind of status, growing by around 5 to 6 times over the next 5 to 6 years. And they have a huge market share in India. Globally, they are also expanding into US. They are L1 for around 300 crores worth of orders. Right now, the order book is around 125, 130 crores. Again, post-issue, the capex is huge. So this is something like that could turn out to be a
Right.
3-4 bagger over a period of time.
Could you please reiterate that lighting company name that you just mentioned, sir?
IKO, IKIO lighting.
IKIO Lightning.
IKIO.
IKIO.
Yeah.
Okay. We'll just look at the share
Okay.
price
And
of
which was the
IKO.
defense stock that you mentioned?
This is not. This is particularly defense, but it is Idea Forge.
The
Deep tech, recent
Idea
IP.
Forge.
Yeah.
Okay. Fine. Okay. Perfect. Sakshi, yours.
Right. Also wanted to discuss with you, Sharad ji, good afternoon to you first of all, that everybody is coming back on the two big boys of markets today, Reliance and HDFC Bank. What is your view on both of them? And of course, after 21 months, as Shell pointed out, there's a breakout on Reliance. HDFC has finally started to move after some 4 years, I would say. Will they finally start to contribute to markets? And is it the right time to buy these stocks now for the portfolio?
Good afternoon, Sakshi. I have different views on both of them. I think HDFC have been eternally bullish. One of the stocks that has not done maybe as well as I would have liked to have. But I think still, I'm still working with initial targets of 1900, 1800 to start with on the stock. And I think it's a large entity now. Once it starts to perform, and which it should with the merged entity, very little overlapping business. So I think that's an entity. Once it starts to work around, the type of growth targets that they have set. In the recent past, we have not seen HDFC being that aggressive. And the combined entity is a large entity. If they can be so aggressive and double over the next 2-3 years in terms of infrastructure, everything, I think that's a substantial growth initiative they are taking. And the best part is that both businesses do not have too much of overlapping customers, so a lot of cross-sale opportunity would emerge. Once that starts showing up in the numbers and the initial base effect is out of your way, where obviously CRR, etc., or whatever reserve ratios you had to maintain, there were some challenges. But now I think it normalizes, and from here on, growth will be very superb. So to start with, I'm looking at 1850, 1900 on HDFC. Beyond that, the re-rating would continue. That is my bet. It has taken a bit more than what we had thought, but that's okay. M&As, big M&As can occasionally take a lot of time. Reliance, well, I think at these valuations, our fair value estimates are around 3100, 3050. So beyond that, I can't see much upside. But today's rally has been very good, and I think a bit of euphoria around Geo, the ARPU is improving or the costs going up. That could be something that's playing on the mind. But I think the base business, the refining margins are subdued, and I don't see them flaring up anytime soon. So that could remain subdued. So when you balance 3-4 businesses, I don't see a very optimistic outlook. The one point where I think it could be very optimistic is the FTTH thing for all the telecom players. I think that's a place which is still very underpenetrated as a country in India from the organized side. So that could give you some positive long-term upside. But in the medium to short term, I think largely at 3,000, more than 3,000, most of the Reliance particularly looks fully to fairly valued.
Okay, got that. So that's the view on Reliance and HDFC. We'll also ask you on the entire cement space, because that's been the story of the day, and it began with Ultratech announcing that 23% stake purchase in India Cements. Is this the beginning of a big bank consolidation that could continue to take over within the space? And is this then the best time to start taking best bets within this space to probably participate in this rally from the day one?
No, I think in terms of demand growth, the way India is poised, the whole urbanization story, etc., and the whole infrastructure story that we are betting on, I think there is no dearth of demand for the whole space. So as a space, it will continue to sparkle going ahead. I think very few people would have doubts about that. The only thorn in the flesh could be, the petcoke prices that seem to be rising internationally. So that could create some pressure on the numbers. But I think till the budget, you would largely be sentimentally very positive, expecting a lot of, announcements on the affordable housing and infra space. and that should result in very strong growth. So barring short-term hiccups or medium-term hiccups in terms of one of the raw material prices, I think the industry is poised to grow very handsomely over the next 5 to 10 years, along with the growth India registers. The other point that could happen is obviously there could be a capacity glut kind of situation where you do not have the required capacity, and there's not a lot of capex announced according to the requirement that we might have over the next 5 to 10 years. And raw material scrambling is also something that most competitors are looking at. Now it's largely a duopoly with the Adani and Ultratech largely fighting it out. The India Cement deal and more consolidation, yeah, I certainly think the less than 10 MT space should be very active, and pockets they should continue to look at acquisitions. And most probably the larger companies can take on these acquisitions and improve the EBITDA per ton of most of these companies. So maybe the smaller companies will remain positive. But rather than speculate on that, I think I would want to buy a mid to large sized company where the valuations are attractive and comfortable. On that basis, I think Dalmia Bharat does make the cut. So I'm very positive in Dalmia Bharat. It's trading at what, 80, 85, 90 times EV per ton. Today's deal is also around 85. So I think this is a much larger capacity, 40, 45 million tons, going up to 70, 75 million tons easily over the next 2 to 3 years. So that's a large capacity, and I think the EV per ton is at a huge discount to what it should be. Like India Cements today, the deal has happened. It's 15 million tons, and we are talking about $85 per ton. So I think Dalmia is something that could easily trade to 120, 130 EV per ton in terms of dollar, and that could result in at least 30 to 35% upside from current levels. So if you want to pick one investment bet, I think Dalmia Bharat will make the cut. Among the smaller companies, I think JK Lakshmi is an excellent bet. Operational efficiencies are very good. Valuations are at a discount to Heidelberg. Whether a deal happens there or takeover happens, I think that's highly doubtful. But then in terms of operational efficiency, and as if you want to bet on an industry as it is, I think these two companies do make the cut.
Okay, markets are galloping as they hear Sharaji, 24,038. The day's high is upon us, 170 points higher on the Nifty. The bulls are making the best of this strong run that is happening on Dalal Street, and pushing out bears as much as they can. Day's high you see on ITC 446. In fact, there is so much of activity that's happening on Nifty that it needs to be marked in a bit of detail. And you see a strong move not only on Nifty but on Tata Motors, about 1.5% higher. Cummins India 1.78% higher. Infosys 2.2% higher, 1574. Tata Motors, as I had mentioned, 2.5% higher. So these are stocks that are running up fairly strongly. Adani Ports 1.3% higher, 1486. Apollo Hospitals 6200 for you, 1% higher. Hindalco 1.8% higher, 687. Sharaji, coming back to you in terms of value, and of course cement. You mentioned Heidelberg, and Heidelberg as potentially one of the candidates for a takeover. Sticking with India Cement at about 290, based on EV by EBITDA that you mentioned as the benchmark for cement valuations, is India Cements still attractively priced at about 290?
No, I think that these prices, more or less, it's fairly to fully valued. The only thing I think that you could speculate is that there has always been speculation around India Cements that there is a land bank which is substantially large. If the deal does happen at this price only, then most probably it would rest to speculation most of the facts that whether there is a land bank or not. But if my understanding is right, the land bank is pretty huge, roughly equal to the market cap of the company. If a demerger of that happens before the deal or something like that against comes out, I think that could be a very good value unlocker for the company. But at these prices, if you still look at just the standalone cement business, I think it's roughly fairly to fully valued. The other aspect that you might look at is that once Ultratech does draw in how they can improve the efficiencies and the utilizations. Because I've always believed that South India is very largely underutilized, and if you have capacities in North, Central, and South India, you can calibrate in such a way that you could means partially improve a lot of the supply from South to Central India, which would not be as transport wise expensive as maybe exporting it to North or extreme parts of the country. So I think battery utilization ramp up could be much faster, and the EBITDA per ton has a lot of scope for India Cements to improve. So that could also play out in terms of valuation. But I think these are the two primary triggers. One is the land bank, if that does fructify into something material as per market grade point. And the other could be the improving operational efficiency. This could be some upside risks to it. Considering a status quo, I think these prices are more or less fully discounted.
Okay. Telecom is another space where your intelligence requires, where your view requires a bit of a fleshing out. A very strong transaction happened on Indus Towers 10 days ago, and we've seen a very muted but a very sensible auction of airwaves that has taken place over the last 2 days. Views on Indus Towers and maybe Vodafone Idea as well?
Sir, Indus Towers, I think it would continue to be in your good investment books because the big issue that has been, trailing them has been the Vodafone Idea outstanding. Now, most probably with this outstanding behind us, there is a high possibility that 5G use cases being developed would require a lot of tower demand and ancillary service demand also. The smart city project should also take off very handsomely. That should also help them. So I think Indus Towers is a good idea that you could bet on, expecting that the PE rating should happen there. So Indus Towers will be a good story. Regarding Vodafone Idea, I think there is a lot of hype and euphoria around what will turn around and a huge improvement there. But I think the debt numbers are very huge, and when you have to convert, receivables to equity, I don't think that's a very good sign for any business. Though the market is very optimistic that at least they have waded through a problem. But I think still customer addition, business growth, establishing the 5G networks, etc., across the country and rolling it out successfully and then scaling it up. All that is going to be a huge challenge because over the last 1.5, 2 years, the type of edge Bharti and Geo have created over them, it will not be an easy path to traverse for Vodafone Idea. And the debt hangover still remains substantial. So I think it's a bit premature to bet on Vodafone Idea. I would like to see the business numbers transform rather than speculate on hearsay and belief that most probably a lot of development would happen. Because the debt numbers are huge, even if a bit of it is paid around 30, 40,000 crores, even 50,000 crores, still the overhang is substantial. So I think it's okay for the daredevil kind of investor who want to risk on a zero or hero kind of investment. But I'm not a believer of that kind of trade. So I think it's still a long way to go for Vodafone Idea. Market speculation here and there is okay, but I'm not still betting on it.
Okay, yes, we've taken your view on that, on both Indus Towers and on Vodafone as well, and the telecom space we'll continue to watch out for even going forward. But Sharadji, we are just less than a month away from the union budget. Many viewers and investors would be looking for probably adding names to their portfolio that would probably benefit from the budget. Is that a wise strategy to have? And are you also keeping an eye out on any sectors, stocks that would largely benefit from the upcoming budget? There is a lot of buzz that this budget could probably have some surprise for investors, something that has not happened in the last few budgets.
I think the general consensus is around some tinkering on the tax rates finally. Uh, I don't know if that does happen, then most probably your consumption themes will be a good bet. So combine that with margin of safety. I think ITC becomes a good bet to have on your side. I think valuations are the most comfortable within the FMCG space. And if that does happen, I think consumption would be given a drive. Rural India would remain a focus. So that way also most probably it would be good for FMCG companies. Infra would continue to be a theme, but I think now to find very good ideas within the infra space won't be that easy. So I think ITC one is one that comes to mind, and renewable energy would continue to be in focus. Borosil Renewables is one company which has not really participated much in this rally of renewables across the board. Some other stocks also do have some growth option available. They might have another 15-20% upside or even more in some cases. But in terms of underperformance, I think Borosil Renewables has been a subdued counter. So if some turnaround numbers or some announcement happens there, that could see some buying. And on the FMCG side, I think with tax tinkering and rural focus, ITC could be a good bet you could look at. But generally, I would not advise, focusing on such events and trying to speculate. Doesn't really make much sense.
Okay. Viewers, you have to take note of the Nifty. It's 24,080 right now as far as the Nifty is concerned. A double century on the Nifty. And, Shell was always interested in talking about cricket, which he will definitely watch tonight as well when it starts. But the markets are throwing a lot of opportunity, and they're definitely doing better than what the cricket match could have, right?
Sakshi, we have a match today. The Nifty is setting the, how should I say, pitch for Rohit Sharma and Virat Kohli to just take it out. Okay, and Bulls are giving all the ideas to Bumrah as well as Kuldeep Yadav as well as Arshdeep Singh to clean bowled the Bears. Just they have done on Dalal Street today. Just imagine. 810 was the intraday low today, 23,810, and we are going at 24,074 as we speak. 8 minutes left. आप आधे घंटे और बाजार को खुलवा दो तो 25,000 आज कर देंगे. शरद जी को तंग करने के लिए बाजार हमेशा रिकॉर्ड हाई लगाता है. But as I said in my opening remarks, Sharadji is very smart in hiding his happiness. He doesn't show it on his face. Quietly hunts for great stocks like, Ether Industries. Just today, Ether figured out in one of my screens as far as the long-term charts are concerned. And I was wondering why. Little did I know that Sharadji would come and talk about it. I'd also like to highlight Polyplex. This is something that he had mentioned in our earlier conversation around 910, 890 rupees. It's crossed the 4-digit mark. The reason why I pay so much of attention to Sharad's stock pick is because I note them down in a particular screen on my counter and I keep on updating them. Without doubt, Sheila Foam, Coforge, Polyplex are the ones that I remember offhand. And today, we've added Ether, Echo Lighting, and of course Idea Forge. Sharadji.
Yeah, I think these are good ideas. We are looking at them with a long-term approach. All three are in different zones. Sheila Foams hasn't really done much, but I'm still hopeful that it could be something that would turn out to be very good with the kind of businesses they are into. And a similar idea you could add on to is Monte Carlo Fashions, a strong brand, strong franchise relations over the last 2-3 years, but not much has translated into revenues, and the seasonality aspect has also gone out. So these are 3-4 ideas initially you could keep looking at. I think these are excellent long-term bets. The management good, product quality is good. Once the business does turn around, there could be a lot of re-rating that happens in most of these companies.
Monte Carlo from a high of 920 is at 610, and I am promptly adding to this to the list of deep value stocks that we are tracking on behalf of our valued and very intelligent guests. Sakshi, I'm going to send you a picture of this list, which is growing day by day, and this is something which is really interesting. So Sharadji has shared with us 4 stocks today, which is Monte Carlo just 2 seconds ago. Before that, Idea Forge, EQ Lighting, and of course Ether Industries. So these are the good ones to watch from his side, and there is absolutely no stopping the Nifty. Every passing minute there is another stock that picks up the baton and takes the index ahead. BPCL today 2.8% higher, days high 306.95. Adani Ports, very anxious to change a digit, 1493, 1.7% higher. Bharti edging 2% higher, 1488.90. And I'd just like to mark in the stars as well. This is not a part of the Nifty or the Sensex, but days high 369. Please watch that stock out for a very, very nice long-term move from here on. What else is moving? Idea Cellular 18.66, again 2.5% higher. And in the morning we had marked the capital goods space. Siemens, very, very strong move, 3.8% higher, 78.91 in futures. Cummins India was also rising fairly rapidly as far as prices are concerned. And of course, the big daddy of them all, ABB, back in the gains as far as prices are concerned. Sakshi 326, 4 minutes for the June FNO expiry to end, 4 minutes for the market to close, and I'm just waiting with bated breath for the cricket match to start at 7 p.m. today.
But closing is finally above that 24,000 mark for sure. That वो तो पक्का ही हो गया है. So that is a good deal that we have, and 200 points of a surge, and across the board it's a happy green screen that we can spot. Let's ask Sharad ji, where else does he feel that where we have missed asking you, sir? Is there anything that has come onto your radar and we haven't spotted? Any particular sector that is all set to outperform in this next leg of the rally beyond 24,000 on the Nifty?
I think IT should certainly be one sector. Stocks like LTIM, Coforge, Infosys, even a Wipro for that matter might perform very well. PVR Inox has been very subdued. The expectation of numbers over the next 2 years could be much better. So that could be one story that could do very well. UPL has come up a bit from the lows, but I think still there is scope, a very good scope actually within the chemical basket for UPL to still continue to outperform, finally outperform. So I think these are 4-5 ideas which I'm looking at. As a sector, I think certainly IT and private sector banks, specifically HDFC and Kotak, would continue to be my top bets.
Okay, got that. Well, thank you so much, Sharad ji, for being with us on this very special edition, and congratulations yet again to you for those record levels, and we'll continue to have you back on the screens to give us those deep value stock ideas that you continue to give, and Shell continues to add on to your own list too, which we can revisit again and again. A brilliant day that has panned out. The Nifty Bank, however, is in the red now, and about 0.2% of a weakness, so some profits being taken off as far as the banking counters are concerned. Let's look at the top contributors on the Nifty. Heavyweight counters, Infosys is now in fact the top most contributor. In fact, it's 33 points is what it is contributing to the Nifty gains of about 171 odd points. Reliance is contributing 27 points, TCS about 20, Ultratech Cement about 16, and Kotak Mahindra Bank about 14 points, Bharti Airtel about 13 odd points. So those are the top contributors. We have a close almost above that 24,000 mark. Some profits at right from the top is what we have already seen, but definitely about 40 odd points is what we have slipped from those all-time high levels, but still about a good 175 point over move on the upside. It's the IT space that continued to shine today, 2% higher. Infrastructure, oil and gas, autos, metals, FMCG, the broader markets, realty and financial services names also hogged the limelight. Of course, it was the cement space and the cement space alone that started off the show in the green, and Ultratech Cement continued to remain the top stock on the Nifty, top contributor, top performer on the Nifty today with 5.5% surge. LTI Mindtree that Sharad ji just pointed out remains the second top mover, 3.5% higher. NTPC, Wipro, Grasim, Dr. Reddy's, JSW Steel, a mix of all the sectors and some of the stocks from them outperforming. India Cements, the top performer within the FNO space, 11% higher. Manappuram Finance about 7% up. Ultratech Cement, Bosch and Oracle Financial Services also gaining the limelight in the FNO space. What did not do well? On the Nifty, on the downside, we did see stocks like L&T, Shriram Finance, Divis, Aisha, HDFC Bank and ICICI Bank pulling back after those record levels, and on the Nifty Bank and the Nifty. And PSU stocks about 0.8%, so good screen there. NTPC, BPCL, GAIL, REC, PFC, Oil India, those were the top performers within that pack. And of course, those counters that Shell had been highlighting all through, the auto space stocks, the bearing makers, railways, defense, some of those that continue to shine bright. Anything else, Shell, that you want to add?
Yeah, Sakshi, it's been a phenomenally high volume day. I am looking at the top 15 top traded stocks, and you will not believe that 13 of them have volume of more than 2,000 crore rupees each in terms of cash shares traded. Mazgaon Dock, 5,500 crores worth of transaction happening. HDFC Bank, 4,600 crores. I'm just giving you round of numbers. Reliance Industries, 4,300 crores. India Cement is a deal, therefore you have 4,100 crores. But Bharti Airtel, Axis, Ultratech Cement, Indus Stars, all above 2,500 crores. ICICI, Kotak, Infosys, all above 2,300 crores. And Garden Reach, another 2,100 crores. So, and the beauty is that out of the first 17 stocks in top traded counters, just one of them is showing a red tick, and that's L&T down 1%, a third of a percentage down on HDFC Bank. Ladies and gentlemen, this is a very, very strong rally. The index has closed above 24,000 rupees on the Nifty. If you do not agree with this very sharp move, it's best you remain on the fence. Please do not try to short this market. Sakshi.
Right, viewers, we wrap it up at that. It's been a terrific Thursday that's panned out to be, and a fantastic series expiry. The Nifty's ended with almost 6.7% gains in this June series. So it's a brilliant one. Let's see how the new series really pans out. It'll be the budget focused series too. So that will be all important for us to watch. Many thanks, viewers, for staying tuned in.
Shri Om Birla is declared elected as the Speaker of this House.
Om Birla is back in the Speaker's chair in the Lok Sabha, becoming only the second presiding officer to return after having served a full term after Congress's Balram Jakhar. The NDA candidate won against opposition's K. Suresh after a voice note.
Those against may say no. I think the ayes have it.
In a rare moment of bonhomie, the Prime Minister, newly appointed LOP, then escorted Om Birla to the Speaker's chair.
आपके चेयर है, आप संभालें. Please.
आपकी अध्यक्षता में